Viewers, a very good afternoon to you and welcome to today's episode of The Dominion Desk. And as always, our mandate is helping you to master the marketplace with kingdom principles. And today I have a special visitor in the house. He is the head of investment analysis for KCB Bank. So even before we get deep into the topic of today, allow me to let him introduce himself and then we pick it up from there. Karibu.
Thank you, viewers. My name is Jesse Ludenyo. I head the investment analysis department in KCB Investment Bank, where we are about promoting and enhancing investment awareness and financial awareness and prosperity among our clients. Yes.
Karibu sana to the show. Just as you said in your introduction, the head of investment analysis at KCB, I want us to break down investment and basically, if we can just call it savings. So I want us to start from just the introduction of savings. Just let us know something about savings.
Yes. Well, savings is, of course, as we know, setting aside a part of what you make today for the sake of the future. Okay. So it is an important aspect in one's life. Throughout our entire life, we also have there is an importance in considering the future in our present day activities, so that as we work today, someday in future, what we have set aside will work for us in future.
Yes. Now, I understand that we have various saving schemes. Maybe if you can just take us through some of the saving schemes that you have available under investment.
Yes. Some are well known. So one we have is the normal chamas at the very basic level of our society. Yeah. You will find we are all grouped in one chama or the other, based on where we are, our surroundings, our home. The people we know, our friends, those form the basic of chama. Then from there we have what we call SACCOs. Now SACCOs are more regulated schemes. They are basically called savings and credit cooperative societies, so shortened in the form of SACCOs. Of course, SACCOs give you a rate of dividend annually. And that you're also able to access credit or loans from your SACCO, as I'm sure most of us are members of also SACCOs. Aside from that, we also have what we call bank savings accounts. So you can open a normal savings account with a bank, and that's where you can deposit and withdraw. We also have what we call targeted savings accounts. So, and a good example is what we call the goal account. So goal account is, let's say, if you are saving towards a particular goal, could be school fees next year, could be traveling for holiday, then you can open what we call a goal account. So a goal account helps you to save towards a particular goal. And then aside from that, we also have what we call money market accounts. So money market accounts are also other saving schemes that give you an advantage rate over your normal savings account. So with the money market account, you get to do regular deposits, and that uses what we call compounding effect to multiply your money in the market. So what money market does is that they collect the pool of funds from savers. They invest those savings into what we call into money market securities. And money market securities are short-term securities, like what we call treasury bills. They run from 3 months to 12 months. And that's why we call them money market savings accounts. So all these are different options of saving your money.
You have spoken about compounding, and then we have basically people who invest, and the main goal actually when you go invest maybe for long term, your main goal is that interest that it gets to accumulate over time. Is there a difference between compounding and the interest rate? Do we have a big difference between the two?
So you will find because of compounding, a money market rate will probably give you a rate of about 11% to 13% today. But on a normal savings account, you will find a rate of about 4% to 3% to 5%. So average around 4%. Similar to a gold savings account, you might find a rate of about 7% to 8%. So this premium that you're getting on a money market account, about 13% compared to 7% in a targeted account or 4% in a normal account. That premium is because of what we call compounding. And so compounding means from your last deposit to your next, your last deposit is invested. So when you deposit next, the last deposit continues to compound at that particular rate as the new deposit that you made compounds at a new rate. So that's what we mean compounding. It's basically multiplying your money over and over again.
Okay, so you save it over a longer period of time?
Yes, so for you to enjoy the full benefit of that account is the longer you save, the better, because then the compounding effect becomes larger and larger and larger.
Okay, so for compounding effect, you have to do it over a relatively longer period of time.
A relatively longer period of time. So, for example, the rate would be 11% per annum.
Okay.
So 11% per annum means for you to enjoy that full amount of 11%, you have to save for a full year. Mm-hmm. Yeah. So
after the 1 year lapses,
you can continue saving, or you can withdraw your interest or whatever you've made on top of what you've been saving, or you can still withdraw the full amount. Mm-hmm. So the advantage of something like a money market account is you can withdraw anytime after 2 weeks of depositing. Mm-hmm. So if you deposited today, you only have a lock-in period of two weeks. Lock-in means it allows the managers to go and invest that money. After 2 weeks, you can be able to withdraw at any time. So that's the advantage about a money market account. Yes.
Now, other than just the institutions themselves, what brings about the difference between someone saving in a SACCO and in a money market, other than the institution itself?
Okay, so the difference about all these savings products is because of convenience for the customer. So these products are designed to suit particular customers for different needs. So let's say you are looking for a savings product where you can also be able to access credit on it. Then a SACCO becomes a very good vehicle for you to save with. If you are looking at an account where you can be able to access your money fast, then the bank accounts and the money market accounts become very, very good avenues for you. You understand? If you are looking to have a lump sum amount at the end of the year, so that's why you'd have your normal chamas and merry-go-rounds. Exactly. So you see, in a money market account, you can withdraw your interest and leave the principal continuing to multiply. But in a SACCO, in a chama's setup, you pull out all of your money. Once it's your turn, you receive all the money. Once it's someone else's turn, they receive all the money. You understand? Yeah. So all those different options are available for all types of clients.
Okay. Yes. You understand everything has the pros and the cons. What would be the disadvantages, or rather not really disadvantages? What are the things that somebody must know when you are getting into the money market? Okay,
so I'll go through most of them. So I'll begin from chamas. So for example, with chama, of course, you will not have interest on your money. It's basically it's your turn. You get the full amount. You wait until another year. When you come to SACCOs, it's important to also be careful with SACCOs. Because sometimes you will find SACCOs then get to have a challenge when the customer's deposits cannot be recovered. Just recently, we had cases of SACCOs not being able to recoup their money from Cusco, and so that puts your money at risk. Of course, the advantage is you can be able to take credit on the SACCO depending on the term. But also one other disadvantage that comes with that is you need to be careful when it comes to signing off for SACCOs, because you tend to be liable for somebody else's debt. And it's very easy if you're in a SACCO setup to be signing off loans on behalf of someone. Otherwise, you're guaranteeing as a guarantor. So if you're guaranteeing loans, then it puts you at a risk. Now, those are not things you will find with, let's say, a bank gold savings account or a money market account, because you're not allowed to guarantee anything. It's yours, it's your account. Only you.
Nowadays, we don't have the guaranteeing factor in banks, because I do understand that if you need to take a loan, sometimes those forms you normally are required to have a guarantor too.
Yes. So if you're taking a loan from the bank, that is a different kind of setup. That one, it does not affect your money market account. So, for example, if you took a loan with the bank, and then you defaulted paying, the bank will not go to your money market account to begin paying back. No. Your guarantee that you give to the bank would either be, your assets, your land, your car, your house, whatever collateral that you're able to put on the table for the sake of the bank. They don't touch anything to do with your investment unless you want them to, you instruct them to. But even if you did, the money market arm of the bank is not liable to provide that data to the main bank. So your investment is always separate from your loans and what's happening with your bank account. So that means then money market continues to have the advantage of number one, you can it's your private account. You can access your money when you want, and of course you also get a better rate of return. The disadvantage now comes also for money market now is that you also have to be careful the kind of money market that you're opening, because we might have a money market might give you a very high rate, but also just like SACCOs, you need to be careful on the management structure. Always find out who are the custodians of that money market, and always find out the dynamics behind the money market. Where are they getting that rate of return that they are guaranteeing you? Understand? Yeah, and it's important to also read the money market fund fact sheet, because the fund fact sheet will tell you the performance of the money market, where it is, where they have allocated their money. In other words, where they're getting that return from, which is important.
Okay. Do we have a body that regulates them, both of them, apart from the chairmans, maybe, and the SACCOs?
Even the SACCOs are regulated. I think they're well regulated through SASRA, and they're also monitored in that space. So when you move towards banks, of course, banks are the most regulated of financial institutions. So from the bank accounts, banks, of course, are regulated by Central Bank of Kenya, among other bodies, the international bodies, international finance institutions. The money markets are regulated by what we call the Capital Markets Authority. Yeah, so the Capital Markets Authority oversees all the money markets and gives licenses. And even for all other investments aside from savings.
Okay. Now about the savings account, what are the interest rates? For example, you're saving your money with the money market. What are the rates?
Yeah. So money market rates vary. They give a daily rate because the money market rates fluctuates on a daily basis, but average ranges between 11% to 13% currently. In the market. Yes.
How would you classify the Safaricom's ZD?
Well, Safaricom ZD. So Safaricom previously had what we call Mali, which was being managed by a fund manager called Genghis Capital. But Genghis Capital ended up winding up and closing shop. So what we believe is that they're letting Mali die a natural death. And then they are bringing up this new fund called ZD. So with ZD, they have three managers: SIB, Investment Bank, Standard Investment Bank, and I think we have Ala Capital, and I think we have Sanlam. So they have three managers with it. It's another money market product in the market. Like I said, it's doing well. It's important for investors to keep monitoring its rate also and performance.
Maybe just a quick one. Are they compounded on a daily basis for ZD, the Safaricom's ZD? Are they compounded? Are their interest rate compounded on a daily basis or on a monthly basis?
So the interest rate is calculated on a daily basis. So what you'll read on the newspaper is a daily rate as of yesterday. Why are they calculated on a daily basis? Because People keep depositing and others withdrawing. And how that rate is calculated is they will take the returns they made for the day, less all the expenses. Then they will divide by the number of unit holders. So you see the number of unit holders keeps changing day by day. That's why they have to publish that daily rate. Yeah, but the annual rate is guaranteed. So if you invest at let's say 12%, at the end of the 1 year you will get your 12%. The daily rate is just the rate that is calculated so that anyone who is purchasing on that day gets the rate for that day.
Okay, thank you. Because of time, kindly allow me to take one more. What are the security measures? Me as an investor, I want to invest in money market, in the bank and all that. What are the security measures to make sure that my savings as an investor?
Yes, so number one, like I said, it's important to monitor, to read the fund fact sheet. So the fund fact sheet will tell you how much is being invested, where the money is being invested in, who is the manager, and what is the rate when the fund was started. Those kind of things. Once you invest in a money market, they're supposed to send you a fund fact sheet. That fund fact sheet will tell you the performance every month, if possible. Others might send you even more frequently than a month. Number two, you'll also receive your account statements every month at least. You should receive your account statements every month, which should tell you the account balance so far. This is what you deposited, this is the interest, and this is the total. Number three, you also need to look at who are the managers. Don't be so much interested in the rate because it's high rate. Also look at the institution behind it. For example, banks, insurance companies that have been here in this market for a long period of time, they are much more stable. So the chances of you losing your money are rather minimal. Number four, it's also important to look at the historical performance of the fund, because we have some funds that have had issues, some funds that have had management problems. And then number five, also look at the duration of the fund. You want something that is tested. If today I ask you, have you ever heard of Britam Insurance? Chances are 90% of Kenyans have heard of it because it's been here for quite a long time. If I ask you, have you ever heard of KCB? Almost everybody knows KCB because of that. So it gives you a bit of stability in terms of your money.
Thank you, sir. Thank you for making time for us. We have come to the end of today's episode. Maybe even as we conclude, what would be your rounding shot for our viewers?
Well, I would encourage viewers that it's important that as you make money, that you also save for your future. It's not a bad thing to save. It's a very good thing. The Bible says in the book of Proverbs that you cast your bread upon many waters, and after a good time you will find it. So it's important for us, even as believers and even as investors, to always consider the future. It's a biblical principle, and it's good for us all.
Okay. Thank you, sir. We look forward also to speaking to you on another time in another episode as we break down even more and more topics with regard to investment. Viewers, you've heard that. It is important for you to save, especially for our children, our sunset years. There is a time when we may need that money we are saving today. So it is important for you to save. Thank you for watching today's episode, and we look forward to seeing you again. God bless you. Goodbye.